All right, guys, so I've been getting a ton of questions from people in the Discord, new members who've just joined, asking me what are the best trading strategies to use. Inside the Discord, we have around 20 tested and proven strategies, and I can understand that it can be very, very overwhelming if you're brand new, and some of those strategies are complementary to other strategies, so it gets a little bit confusing. These are the only two trading strategies you will need. So these are the two main trading strategies that I use personally, and I've used these strategies for years, so they're not fads. They're not going to go away. They're not some secret ICT trading concept that's going to be here one day and then gone the next, right? I've been using this for years since I started trading, so I know that these work because I've seen consistent results with it. And for most of you that are watching this, that is exactly what you need. The first trading strategy is trading key horizontal levels with fib confluence, right? So what do I mean by key horizontal levels? Well, I'm talking about support and resistance levels. Now, this is a very common concept inside the trading world. I'm sure all of you are familiar with the horizontal levels, but I bet most of you are not using them correctly. And by correctly, I mean multi-time frame. You guys need multiple confluences using support and resistance levels from multiple time frames to confirm your entry. So the only trading view indicator that I'm using for both of these strategies actually is EzSR. So this comes with the EzAlgo bundle. If you guys don't have EzAlgo yet, be sure to click the first link in the description below to get yourself EzAlgo, EzSR, and our very own oscillator. And inside of the settings, I have 3 different time frames toggled. All right, I have the chart time frame, which in this case is the 1 hour. I have the 4 hour, and I have the 12 hour. I always, no matter what time frame I'm trading on, use the 4 hour. I find the 4 hour levels are very well respected, and the 12 hour as well. Now you can use a daily time frame if you want instead of the 12 hour. But honestly, it's around the same. It's roughly the same. So, and what you're looking for is confluence. So you want to see 2 or even all 3 time frames overlapping. When you see a 1 hour support level overlapping a 4 hour support level, or a 4 hour overlapping a 12 hour, you can be confident in entering a trade in that general area. Now, keep in mind the higher time frame levels will be respected more than the lower time frame levels. So I like to see a 4 hour and 12 hour confluence. On Bitcoin currently, you can see that we have a 1 hour, a 4 hour, and a 12 hour overlapping this 27.2 level. So just by looking at the chart, I've identified a key level where I can take a long position. Now, for example, in this video, I'm going to be covering a slightly higher time frame trading because for the most part, you guys do not need to scalp, right? Scalping is risky. I do put up scalping strategies. Really, you don't need to scalp. You need to go to a higher time frame, especially if you're just starting and are not profitable yet. You need to zoom out, go to a higher time frame, and look for these key levels and look for confluence with the EzSR levels. Now, something else I like to have are the fib confluence, right? I'm actually looking at a long position right now currently because we have a support level right here, retesting this 27.8 level. Now, this level is on a lower time frame, and since I'm on a 1 hour, I can't show levels from, let's say, a 15-minute time frame, but this is a support level on a lower time frame. And we also have key fib confluence. So the main fib levels I like to use are the 618 and the 0.65, otherwise known as the golden pocket. As you can see, there are some other levels I like to use, such as the 0.702 and the 0.786. The 0.5 is a great fib level as well, but I find that works better on a higher time frame, such as a 12 hour or daily time frame. And for maximum confidence, I recommend waiting for at least a 61.8% retracement. So I only take longs when price is below the 618 level. So if I see that there are EzAlgo levels with a key fib level in confluence, I'll know to take a position there. You can see I'm also looking for a swing trade here at around 26.5. Reason being is that we have a golden pocket all the way from this swing low, and we have the range lows with this candle right here, right there. So we have, these range lows, which is technically a key horizontal level with that golden pocket confluence. Now, there are a few different ways you can enter these trades. You could set a limit order, or you can enter a market order when there's a reaction. Keep in mind that a limit order is going to be a little bit more risky because you're not waiting for that full confirmation. Now, there's a full guide inside of the Discord in the education channel of how to dollar cost average for your entry. This means you don't put the full position size at the first entry. Instead, you have multiple different entries. What this does is it cuts risk. If you were to get stopped out, it can reduce risk by almost 50%. And also you're getting a better average entry in case price were to come down below your initial entry and then start to come back up. Instead of your average entry being right here, your average entry will be right here. So that's the first trading strategy I recommend. The second is a swing failure pattern of a major pivot. Now, a major pivot could be something like this, range highs and lows, or it could just be a failure and reclaim of a key level. So sometimes inside of the Discord, when I'm posting a setup, I'll say, if we reclaim X, then I'll look for a long position. What that means is that I'm waiting for price to fail a certain level, maybe even close below, and then reclaim that level and enter on the reclaim with my stop loss below that previous low. Now, this is also referred to as a deviation in trading, so you might have heard that terminology as well. But this is technically a swing failure of a key level. It doesn't always have to be on the same candle. It can be a multiple candle sequence where you're losing a level and then you recapture that level. It would be a swing failure. Now, an example of a candlestick swing failure is right here. We were at a key horizontal resistance level. We also had this downwards trend, and we came up, grabbed the liquidity from this candlestick high and closed below, right? So you'd enter a short position on the closure with your stop loss right above this candle. As you can see, that was a beautiful trade. Now, for a swing failure pattern, you can set limits at these levels. For example, I might want to have a limit at the top of this candle wick right here, but just keep in mind it's going to be a lot more risky. For maximum confirmation, wait for price to go above that level and then close below, and then you can enter the position. So a swing failure is a failure of a key level or point. So it could be a support level, a Fibonacci level, or just a candlestick high or low. Well, those are the two trading strategies that I recommend. I am going to be coming out with a course on the first strategy, so trading horizontal levels with that key fib confluence. I'm going to make an entire walkthrough and guide on how you can trade that to perfection. I'm also going to include other confluences you can use once you get the hang of how the strategy works, including the volume profile, the easy oscillator, the EzAlgo reversal signals, and the EzAlgo buy and sell signals, where you go to, let's say, a 5-minute or 15-minute time frame when price is approaching that key level and look to take the buy and sell signals from that level. Well, that's it for me. I hope you guys enjoyed this video and learned something. If you did, be sure to leave a like, subscribe to the channel for more trading content, and I'll see you guys next video.